Looking for the best opportunities to yield farm in DeFi? If so, you're on the right channel. Today we'll dive into one of the most profitable blockchains to be a yield farmer on, which is Solana. If you enjoy this type of content and take value from it, you know the drill, like and subscribe. And if you're new to yield farming, check the related comment in the description to learn how everything works and how you can get started even as a complete beginner. Now let's dive in. Solana is among the most used blockchains in terms of active users and volume. It gets a lot of attention from the meme coin chasers, but that only helps the chain to hit higher volumes, and with higher volumes comes more fees, meaning that yield farmers can definitely profit. Current TVL is a little over $6.2 billion, making it the third ranking blockchain, but let's look at some of the other metrics. If you look at 24 hours volume, Solana takes the lead. It almost doubles the volume from Ethereum, the main blockchain when it comes to users activity, TVL, and also deployed protocols. And that tells a lot of the potential that Solana has. Also leading with active addresses in the last 24 hours, still Solana, and by far they have over 8 million active addresses, while the second place, which is Tron, only has 2.3 million, so that's quite a significant difference. Looking at the 24 hours fees, Solana again takes the lead, overcoming titans like Ethereum and even Bitcoin. Although the chain's TVL has not yet achieved the all-time high back in 2021-2022, from the beginning of 2024 until now, we only saw the TVL rising. Right now, the TVL of the chain sits at 6.2 billion, but back in 2022, the all-time high was roughly around $10 billion. And potentially on this bull run, a new all-time high can be set. Now, these metrics change all the time. After all, it's crypto. So depending when you are watching the video, things can differ. But overall, Solana keeps itself as one of the most top-heavy chains where profits are to be made by yield farming. So for that, we'll be taking a look at some of the most bullish protocols right now and ranked by TVL. The number one is Jito, which is a liquid staking platform. TVL over $2.2 billion. The time metrics for the TVL change are always on the green for the past day, week, or month. And Jito being a liquid staking platform, it allows you to stake your Solana tokens, and in return you get not only Jito Sol that keeps your assets liquid so you can go elsewhere and use it for other DeFi activities, for example, but at the same time you are already earning an APY of 8% on your staking. The current Solana TVL here is over $13 million and holders are over 115,000. One of the things that makes Jito stand apart from all other liquid staking protocols is the fact that they claim to be the first MEV-powered staking pool. So when you take part on Jito, you are also helping Solana to run more efficiently and earn MEV rewards. The Jito staking pool helps decentralized Solana spreading stake across the network, and staking to Jito's pool also encourages validators to redistribute MEV profits. So this can be a more conservative way with less risk, but also the APRs, or in this case 8% APY, will be on the lower end also because you don't face as much risk as with other options that we'll touch upon later on the video. So this is potentially an initial step you can choose to yield farm on, deposit your Solana tokens, help secure the blockchain, and as a return for you staking with them, you get the already mentioned APY. So in these 5 quick steps, you can deposit Sol, that goes into the pool, and then in return you receive Jito Sol, keeping your assets liquid. Then the Jito stake pool delegates your Sol to MEV enabled validators. Those validators auction off block space and receive MEV rewards, and then these MEV rewards are redistributed to the stake pool as extra APY. Your Jito Sol accrues MEV rewards in addition to staking rewards. So the main difference between these and other liquid staking protocols that you can find in some Ethereum layer 2s is that those will pay you in the native currency of the blockchain, the native token, And in here with Jito Sol, you get Solana, which is the native token of Solana, to pay you in order to reward you to be a staker, but also on top of that you also get some MEV rewards. So it's a little bit different, and that's also why you can have currently an APY which is above, for example, what Ethereum offers. Another popular protocol on Solana to yield farm is Kamino, and it has a TVL of over $1.6 billion. It's not just a borrowing and lending protocol. Borrowing and lending is actually one of the main opportunities to yield farm on Kamino. So you can do that, obviously. And everything is very well described. So I think it's overall very beginner friendly. If you click here where it says how it works, it's going to be giving you a brief explanation of each opportunity to yield farm. So this is the traditional borrow and lending, but there's others. You can go on and be also a liquidity provider here on Kamino. And if you go that route, you can browse through their offers. There's going to be different pools on different DEX, as you can see here on the DEX tab. There's going to be pools on Orca, Meteora, Raydium, among others. You can also filter the results using their predefined tabs. So if you want to focus, for example, on stables, you can do that. It's going to give you all the options with stable pairs, which doesn't mean singly stable coins, but also other tokens that are pegged in price, so you will not suffer impermanent loss. Although while giving a quick browse through the options here, I can only see stablecoin pairs currently. But if you like meme coins, you can also have a filter for that. So you go here and there's only going to be pairs that have a meme coin in it. Aside from that, you can multiply. So this case, it's going to allow you to leverage your position. And there's different leverage that you can choose here from the list, but I believe the maximum is 5x leverage. And this is done with their system of yield looping. If you want to know how it works, again, you can just click here on where it says how it works. It's going to give you, again, a brief explanation of the whole process. And also you can go on and select the long and short. So this will allow you to easily increase your directional exposure with simple one-click leverage. So you can even use this to hedge against your current position. For example, if you are liquidity farming here, that's probably going to be an option for more advanced users, but it's possible, and you can protect yourself from market volatility, and you can protect your current position by hedging against it, which will allow you to focus just on yield. Wherever the market goes, you'll be protected. One position will cancel the other out, but the yield you get, that's going to still be pure profit. With all these options, it's no surprise that Kamino is one of the most popular protocols on Solana with over $1.6 billion in TVL. Then we have the first DEX here on the list, which is Raydium, the main DEX when it comes to TVL on Solana, although there's many others which we will not focus on in this video, but I'll briefly mention. Meteora is a good one. Orca, it's also one of the main. Right now they're out of the top 10, but usually Orca is one of the best ranking protocols. And even if that is not the case currently when it comes to be in the top 10, it will definitely still get you a ton of volume for your liquidity pool positions. So if you want to diversify your liquidity pools into DEXs, Orca along with Meteora and also Raydium are great options. Raydium has a very high TVL, over $1.5 billion. And if we look at the TVL of Raydium, it is pretty much mimicking what's happening with the TVL on chain on Solana. They had an all-time high of over 2 billions back in late 2021. Right now the TVL is going up again, but it's still not as high as the latest all-time high, so there's still potential for growth on this current bull run. And on top of the most popular pools that you can use to farm the fees being generated by traders, you can also search for some that are being incentivized by Raydium itself, paying with their native token Ray. And that's the case with this specific pool here, Solana paired with BB-Sol. Two pegged assets, no impermanent loss, and heavily incentivized in Ray tokens. Ranking 4th currently is Jupiter with a TVL of over $1.4 billion. Jupiter is a DEX aggregator on Solana. Being a DEX aggregator, the main proposition of Jupiter is to help users discover the best prices across multiple decentralized exchanges on the Solana network. Some of its key features include limit orders and dollar cost averaging, but this is not a platform that only serves traders, since users can generate yield with Jupiter by participating as liquidity providers in the Jupiter Liquidity Provider Pool. And for that, you need to come here on the Perps tab and then click on the Earn button. The pool currently has an APY of 28.8%. This pool is going to be used by traders that are looking to open leverage positions. If they do that, they will borrow tokens from this pool. And people who deposit into that pool, they will, of course, then allow traders to do just that and borrow from the assets they are depositing. And then the pool generates fees from trading activities, and 75% of these fees are then distributed back to liquidity providers. These fees are compounded into the pool every hour, allowing liquidity providers to earn passive income. There's only going to be 5 types of tokens as of now that you can use to deposit on this pool. They're all blue chips and or stable coins. So anything from Solana, Ethereum, wrapped Bitcoin, USDC or USDT can be used to deposit into it. If we scroll down, you can see the TVL, the current TVL of the pool, as well as the specific allocation on the TVL for each specific token. That you can even see the pool size for each of these tokens to change by the second. This gives you information in real time of the pool size for each token. From the utilization column, you can also get to see which token is being most used by traders, so which one is being borrowed the most from the pool. So to sum it up, when you deposit into the pool with any of these 5 different assets, you then get GLP tokens as a receipt for your share of the pool. The pool, in the meanwhile, is going to be used by traders to leverage their positions, so they will borrow assets from the pool. Then 75% of the trading activities fees are going to be accrued into the pool. That will increase your share over time. That's the yield you are earning for being a depositor. And then, of course, you can use, for example, DEXs in order to deposit your GLP tokens into a specific liquidity pool. And when you do that, you are already stacking different yields from different protocols. And there's no locking period here with GLP pool. So you can come here at any time, return your GLP tokens in order to redeem your original deposit. But since in the meanwhile you have been accruing yield in the shape of those mentioned fees, your original deposit has been increasing in number over time. That's not even accounting for the potential appreciation of the asset. Then ranking 5th on the TVL ranks on Solana, we have Marinade. It's another liquid staking protocol. It has over $1.3 billion in TVL. Being a liquid staking protocol allows users to stake their Solana and receive MSOL, keeping your assets liquid. Marinade offers 5 key features. From all of those, no smart contract risk is the one that is the most important in my opinion, allowing users to avoid big risk in DeFi. They don't rely on smart contracts. By using a native staking approach, this means that users do stake directly to validators without relying on smart contracts. There's also protect staking rewards, allowing your staking rewards to be protected for 100% uptime, instant unstake, where users can instantly unstake their MSOL, convert it back to Solana. So this is extremely flexible. And then they also have other features like algorithmic rebalancing or stake auction marketplace that allows users to get the best staking rates. Therefore, it's no wonder that they are one of the leading staking solutions, liquid staking solutions on Solana. They have plenty of security audits, decentralized governance, they are a DAO, and they also have an ongoing bounty program that will compensate anyone who reports security vulnerabilities. They have also very competitive APYs with almost 8%. And when you stake with them, you get your tokens to remain liquid in the shape of MSOL that you can then again go on into other DeFi opportunities to generate extra yield with those tokens. Next on the list we have Sanctum, which is another liquid staking protocol on Solana. They also have a TVL of over $1.2 billion, so they are also in the billion-dollar club. And Sanctum is a very unique liquid staking protocol on Solana. Their mission is to build a thriving liquid staking ecosystem. There are four main functions with their app, starting with their flagship product in the Infinity Pool. You can deposit liquidity into it in exchange for the INF token, the INF token. You can also use their trading section here to buy and sell any liquid staking tokens on Solana. So you can see here from the list, there's going to be a ton of them issued by different platforms, and you can swap anything for another. And for example, let's say if you trade Solana for any of these liquid staking options, that means that your Solana becomes staked and you start generating yield while keeping your assets liquid with the option that you chose to trade Solana for. At the same time, if you sell it and with it buy Solana back, you are automatically also unstaking from that pool. Another unique feature from Sanctum is the stake accounts tab here. You can get it from the drop down menu icon. And the purpose of this tab is to make your life easy. So for example, if you are natively staking Solana, meaning directly staking Solana to a single validator, in that case, you will own a stake account. And you can come here with Sanctum. It will show that you are a owner of a stake account, allowing you to instantly convert that account to liquid staking tokens. As you may know, you only get liquid staking tokens if you go and stake your Solana with those types of platforms. So the key differentiating factor here is for the users who already staked Solana directly with the validator. That might be for more advanced users, but this makes their life easier because when they do that, they don't get liquid staking tokens in return. So in other words, their Solana tokens that they did stake do not remain liquid. But in that case, if they want those assets to be liquid, they can come here. It will show up on their wallet that they do have a stake account and they can convert that to liquid staking tokens, keeping their assets liquid. Also, you can use this stake accounts tab in order to unstake instantly. So let's say if you are a user and you have been staking your Solana into multiple liquid staking protocols, instead of going to each one of those individually to unstake, you can rely here on Sanctum to unstake all of those from one place altogether. So that's why I mentioned before that this is meant to make your life easy. On the LSTs tab, you can get more information on all the liquid staking tokens that Sanctum does support. And you can get even more information about each of those. If you have some particular in mind that you're looking for, you can use the search icon. There's going to be also their flagship one listed right up here on top. So you see more information. Everything is on one place: website, Twitter, Solana FM. You can then go ahead and buy a specific LST here with Solana. And when you do that, you start automatically earning yield because after all, it's a liquid staking token. But they will all slightly differ. And for example, let's go here on BonkSol. This one has an API of 8%. There will be also other tiny differences that can distinguish the tokens in between themselves. And for example, the BBSol, which is the liquid staking Solana token from Bybit. This one has a very high APY of 14%. So you can look at Sanctum as a marketplace for all the liquid staking tokens on Solana. It's definitely a unique one, and it also contributes with a lot of innovation to Solana's ecosystem. There's a lot of other protocols we could be covering here, but for the sake of not making the video all that long, I'm going to stop here with the Sanctum. So we touched upon all the ones that have $1 billion in TVL right now, but still we are a bit over halfway through the top 10. So there's definitely other protocols worth taking a look at. These are just some of the main ones, the most popular ones. So if you want me to cover some other protocol here, for example, not only on Solana, but other yield farming opportunities on other chains, let me know in the comments. If you have any questions or comments about any of the ones I did cover on the video, also let me know. And if you took value from this video, like and subscribe. I'm going to wrap this one up. Thank you for watching, take care, and I'll see you on the next one.